Welcome to XRP Pro Ledger, and right now you are sitting at the intersection of the most explosive convergence of whale data, geopolitical urgency, and technical signals that XRP has seen in over 10 months. And if you are not locked in for the next several minutes, you are going to miss the context that separates the people who understand what is happening from the people who will be reading about it in hindsight. Whales just accumulated 360 million XRP in a single 7-day window, the fastest accumulation pace recorded in a 10-month high, creating a supply shock on exchanges that the on-chain data is screaming about while the retail market is distracted by ceasefire headlines. Today is the critical deadline for the US-Iran ceasefire, and global markets are operating under maximum geopolitical tension right now, with a resolution in either direction capable of moving XRP past the $1.50 barrier instantly. The first bullish MACD crossover since January 2026 just confirmed on the chart, with a short-term target of $1.90. And spot XRP ETFs just hit a record $65.89 million in April inflows, with cumulative AUM between $1.40 and $1.50 billion. Stay tuned until the very end, because I am going to expose the 2028 quantum upgrade that proves exactly what the whales buying 360 million XRP in 7 days already know, and why that knowledge is worth hundreds of millions of dollars to the people acting on it right now. Let us start with the whale accumulation data, because 360 million XRP accumulated in 7 days is not a number that appears in normal market conditions. It is a number that appears when entities with access to information that has not yet become public are racing to build positions before a catalyst that they know is coming materializes in the price. To put the scale of 360 million XRP in context, at current prices between $1.43 and $1.46, that accumulation represents over $500 million in dollar-denominated buying compressed into a single week. That is not retail investors buying dips. That is not algorithmic trading systems rebalancing portfolios. That is large, well-capitalized entities making deliberate, high-conviction allocation decisions at a pace that is creating a measurable supply shock on the exchanges where the accumulation is happening. When whale accumulation hits a 10-month high in velocity, the standard interpretation in on-chain analysis is that the accumulating entities have a specific time-sensitive reason for the urgency. They are not building a long-term position gradually. They are building it fast because they expect a near-term catalyst that will make the current price level unavailable very shortly. The question is what catalyst they are positioning for, and the answer is not one thing. It is everything we are covering in this video simultaneously. Today's US-Iran ceasefire deadline is the geopolitical variable that is creating the binary market condition that sophisticated investors understand and retail investors are simply reacting to emotionally. The ceasefire that has been in place has a critical expiration point today, April 22nd, and the resolution of that deadline in either direction has specific and calculable effects on global risk assets, including crypto. If the ceasefire is extended or a formal agreement framework is signed, the $50 billion oil supply shock that has been pressuring global markets reverses rapidly. Risk appetite returns across equities, commodities, and digital assets simultaneously. And the liquidity that has been sitting on the sidelines waiting for geopolitical clarity deploys into risk assets, with XRP sitting at maximum technical readiness with a fresh MACD bullish crossover as one of the primary beneficiaries. The $1.50 resistance that has been containing the price gets tested with the full weight of that returning liquidity behind it, and the whales who accumulated 360 million XRP at $1.43 to $1.46 are positioned to capture the entire move from current levels to the $1.90 technical target. Now pay close attention here, because the technical picture I am about to describe is the piece of the puzzle that connects the whale accumulation data to the $1.90 price target in a way that makes the math behind the smart money's positioning crystal clear. The first bullish MACD crossover since January 2026 just confirmed on the XRP chart, and in technical analysis, a MACD crossover after an extended period of bearish signal line positioning is one of the highest confidence momentum shift signals available. The MACD crossover is telling you that the underlying momentum of XRP's price structure has definitively shifted from bearish to bullish at the macro level, not at the 1-hour or 4-hour chart level, but at the time frame that institutional technical analysts use to make allocation decisions. The resistance sequence from current levels is $1.50 to $1.55 as the first major zone, followed by $1.90 as the short-term technical target on a confirmed break through that resistance. Whales accumulating 360 million XRP at $1.43 to $1.46 are entering right at the MACD crossover confirmation, which is exactly when institutional technical analysts trigger their buy signals. Stay tuned because in a few minutes I am going to reveal exactly why XRP briefly reclaiming the number 3 cryptocurrency spot today is not just a ranking milestone, it is a compliance threshold that unlocks a specific category of institutional capital that has been mathematically excluded from XRP allocation until today. The ETF inflow data is the institutional money flow signal that confirms what the whale on-chain accumulation data is showing from a different angle, and the two datasets together create a picture of coordinated, multi-channel institutional demand that is building simultaneously across both the on-chain native market and the regulated ETF product market. Spot XRP ETFs just recorded $65.89 million in inflows for April alone, a record for the product since its launch. $55 million of that total was injected in the last week by smart money, which means that the same 7-day window in which whales accumulated 360 million XRP on-chain also saw $55 million flow into regulated ETF products from the institutional allocator side of the market. These are not the same buyers. On-chain whale accumulation and ETF inflows represent different categories of institutional capital accessing XRP through different channels simultaneously. The on-chain whales are the entities with the highest conviction, fastest moving capital, family offices, crypto-native hedge funds, and sophisticated individual whales. The ETF inflows are the registered investment advisors, pension fund allocators, and compliance-constrained institutional investors who access XRP through regulated products. Both channels are buying at maximum pace in the same 7-day window. That is the definition of broad institutional demand, and it is happening right now at $1.43 to $1.46. The Rakuten and Kyobo life integrations approaching their final phases provide the real-world utility demand context that makes the institutional accumulation and ETF inflows not just financial positioning, but fundamental value recognition at commercial scale. Rakuten is not a small regional e-commerce company. It is one of Japan's largest technology and commerce conglomerates, with 44 million active users across its ecosystem of shopping, banking, travel, and entertainment services. When Rakuten's XRP payment integration reaches its final phase, 44 million Japanese users will have native access to XRP-based payment functionality through an ecosystem they are already actively using every day. That is not potential demand, that is imminent, structural, recurring organic demand from one of Asia's most active consumer technology ecosystems. Kyobo Life South Korea government bond tokenization nearing final phase adds the institutional sovereign debt dimension. The multi-trillion-dollar Korean bond market getting its settlement infrastructure upgraded to XRPL rails creates a completely different category of institutional transaction demand that compounds on top of the consumer payment demand from the Rakuten side. Two different demand engines, both approaching operational readiness simultaneously. Here is what the 2028 quantum roadmap actually means for every institution that is making a 10-year infrastructure commitment to XRP right now, because this is the development that most retail investors are treating as a future story, while the whale wallets accumulating 360 million XRP in 7 days are treating it as a present moment pricing event. Ripple has announced a 4-phase roadmap to make the XRP ledger fully quantum resistant by 2028, and Phase 2 is already active, currently testing NIST recommended post-quantum cryptographic algorithms on the live network. NIST is the National Institute of Standards and Technology, the U.S. federal body that sets cryptographic standards for government and regulated institutional use. Phase 2 testing NIST recommended algorithms on the live XRPL means that the quantum resistance upgrade is not theoretical, it is in active technical implementation right now, being validated against the cryptographic standards that US government agencies and regulated financial institutions are required to use. Bitcoin has no equivalent roadmap with a specific implementation timeline. Ethereum's quantum resistance plans lack the institutional-grade NIST algorithm validation that XRPL's Phase 2 testing provides. Ripple is not just ahead in the quantum security race, it is the only major blockchain that is running the race with a defined finish line and an active implementation in progress. XRP briefly reclaiming the number 3 cryptocurrency spot today by overtaking BNB is the market cap event that I told you earlier in this video would unlock a specific category of institutional capital, and here is exactly what I meant by that. Institutional investment mandates at pension funds, endowments, and sovereign wealth funds typically include minimum market cap thresholds for digital asset allocations. These thresholds exist because below a certain market cap, an asset does not have sufficient liquidity for an institution to build a meaningful position without moving the market against itself. The number 3 market cap ranking is the threshold above which XRP appears on the standard-approved asset lists of institutional allocators operating under mandates that include market cap minimums, and it is the threshold above which index providers evaluate assets for inclusion in their digital asset indexes. Index inclusion triggers automatic buying from every fund that tracks those indexes, buying that is mechanical and mandate-driven rather than discretionary. The whales who accumulated 360 million XRP in 7 days, the ETF inflows of $55 million in the same week, and the brief number 3 market cap reclamation today are all pointing toward the same institutional positioning thesis. The buyers who matter are positioning for an index inclusion event that the market cap ranking just made mathematically possible for the first time. The Clarity Act markup targeted for late April is the legislative catalyst that sits on top of the technical, institutional, and fundamental catalysts we have been covering throughout this video, and its potential arrival in the same window as the ceasefire deadline resolution. The MACD bullish crossover confirmation and the record ETF inflows creates a legislative timing alignment that sophisticated institutional allocators are absolutely factoring into their accumulation decisions. The Clarity Act passing its markup phase does not by itself pass the legislation into law, but a successful markup advances the bill to the floor vote stage and dramatically increases the market's probability assessment that the legislation will achieve final passage. That probability shift alone is a catalyst for institutional capital that is currently holding back from full deployment, specifically because it requires legislative clarity before moving. The incremental institutional demand that flows from a markup success from the allocators who need the legislative signal rather than just the judicial or regulatory signal that the commodity classification already provides is additive to every other demand source we have analyzed. And it arrives in the same window as everything else that is converging right now. The complete picture at April 22, 2026 is one of the most comprehensively loaded institutional setups in XRP's history, and the retail market's focus on the ceasefire headline is creating the exact distraction that gives the smart money the cover it needs to complete its accumulation before the narrative shifts from fear to opportunity in the mainstream consciousness. 360 million XRP accumulated in 7 days at a 10-month high velocity, record $65.89 million April ETF inflows with $55 million in the last week. First bullish MACD crossover since January 2026 with a $1.90 technical target. Today, ceasefire deadline with an extension scenario that pushes XRP through $1.50 instantly. XRP briefly reclaiming number 3 market cap today, unlocking institutional mandate thresholds. Rakuten 44 million users and Kyobo Life sovereign bonds approaching final integration phase. Ripple's 4-phase quantum resistance roadmap in active phase 2 NIST algorithm testing, beating Bitcoin and Ethereum simultaneously. Clarity Act markup targeted for late April. The ceasefire panic is not the story, it is the cover story. The real story is that the smartest money in the digital asset space just spent 7 days buying 360 million XRP, while retail was watching geopolitical headlines, and the window to join them at these prices is measured in hours, not weeks. If this analysis changed how you're thinking about XRP, hit like and subscribe. I drop deep dive breakdowns like this twice a day to keep you ahead of the market.